All right, good morning, good morning, good morning, good morning, great morning, everybody out there. We're gonna start with GJ. Yesterday we had a big move up. It was huge enough, and I missed it because it wasn't during my it was during my trading time, but I didn't trade. It's crazy, but it's okay because I live to see another day. I definitely live to see another day. So the weekly was bullish so far. Got about 2 days and 11 hours, so 3 days on this weekly, 2.5 days. Previous day, current day is bullish. That's because of Asian session for the first time in a long time. Previous 4 hour is retracting. So you know what that means. You're gonna put this 4 hour right here just to see if we stay below it. Alright, let's go to the next hour. We haven't gotten an hourly bullish candle yet. We're just gonna start drawing our zones. I do expect some consolidation after the move last night. Let's see how long this is roughly. Roughly 80 something pips. Let's check and see what that 30-minute hitting on. Let's also keep in mind at 7:30 we have news, so we just nothing but 2 hours away. Nothing on 30-minute looks different. I do see where I could put a red zone though. This last swing of this last swing low. We're gonna put that box right there. We're gonna delete that box. This right here could be our take profit if we. Could be our guaranteed take profit if we go up. This can be our guaranteed take profit if we go down. Now with CPI coming up, I'm going to be very, very cautious. CPI is definitely a big move. And we definitely want to be cautious around that big move. All right, that looks good. Oh, that looks amazing. So I'm gonna go ahead and enter this into my broker. Alright, now that I got my zones there, pushing up on the red zone right now. Hopefully we close outside of this red zone. We're gonna see if we can get session highs and lows. We got Asia high right here. And we got London high so far. And we got Asia low. Asia low is right there. So that looks pretty good right now. We got 4 minutes until this candle closes. Hopefully. Alright, now let's go ahead and do gold. Now start at the week. Gold traveled up last night as well. This week we are looking like we doing a flip. Definitely pull back, moving up for the week. Today's only Wednesday. Definitely could mean a lot of momentum. So we're gonna go ahead and put that 4 hour there. Down to the 1 hour. Let's get our zones in there. A zone that I noticed we pushed through. It's actually a few of them. This one, and this is the previous one that we have pushed through. So we definitely want to keep that in mind. This will be the next zone. How far away is the next zone? 23 pips. Not too bad, not too bad. So it's a possibility that we could go down for a CPR. Okay. All right, 30 minutes. That right there, honestly, it looks like it's going to be a red zone. So we got 2 red zone setups. If you don't know, this is the OG strat. Let's see what GJ closed on. Did GJ close? GJ did not close outside of our zone, so we are going to wait. All right, 30-minute is cut like that. Let's see what that 15-minute doing. This is the last swing. $20 pips is right there. 50 pips. 81. 120. 136. So we could go down for CPI. We could go up as well. But I got strong beliefs to the downside. All right. Could come down to this imbalance and then retrace back up. I've seen that happen as well. DJ looks like it wants to close outside of the zone. I'm about to put what I just put on gold onto my broker. All right, let's keep in mind that we are right on the bank zone on gold. Yeah, yeah. I know you see this gold bank zone right here. It could have been old buddy right here that we were supposed to keep a lookout, but he closed out, and that's 2, and this would be 3, so that definitely wouldn't work. See what GJ looking like right now. Retracting back to that zone. Got 5 minutes left, just under. Well, 4 minutes left on this candle. kind of actually want to get right with some more of this book. So while we are waiting, I'm going to apply a piece of this book. We got GJ in gold in the background. All right. Boring trading. Give me 1 second. Alright, it's 6 o'clock hour, brand new hourly candle started. Let's see what that hourly looking like real quick before we start reading. So we bullish on the hour right here. I'm not comfortable with taking this trade. It's not enough pips for me, so I'm going to wait. Got about an hour and a half before news. Oh Lord. So just think about if I take an entry right here, I'll be getting 16 pips, 15 pips. With spread, that's gonna probably be like 13 pips. It's not even well worth it. Definitely not worth it. Let's see. Look at this GJ hourly candle. Okay, the hourly closed as that right there. Kangaroo tail to the downside. It's not near a zone per se. Could be near a zone, but it's not near. All right. Going back to the 15-minute. And we gonna leave this sitting right here so we can look at it in the background. And let's go ahead and dive into what matters. Boring trading is expert trading. If you find yourself bored with your trading, you are probably consistently profitable. The desire for change or a new challenge is often the biggest threat of profitable trading. Wow, that really just defeated the purpose. All right. Exciting trading is often a sign of one of two problems. Either the trading system is new and unproven, not back tested, or there is too much risk on each trade. If the system is unproven, the excitement is due to the unknown. This is due, I mean, this is precisely, wait. This is not a good thing. Exciting trading is exciting because it is akin to gambling. Gambling is exciting. This is precisely why risking too much on any given trade is exciting. Trading should be fun, but if it is exciting, it is a sign that the system is unproven or you are risking too much. Remember the story about Miguel? He is an expert trader, and by his own admissions, his trading is boring. Embrace the day that your trading becomes boring. It may still be very fun to make money consistently, but it does not have to be exciting. A simple trick. Right now, you know how to become an expert. You know what you can do to get to expertise. It involves work, but if you choose to take a path of the expertise, it is now available to you. The problem with the steps to expertise is just that there are steps, and it takes time to achieve these expertise. Obviously, patience is needed to get there. The work and effort is well worth it, but the fact remains, it does not take time to get there. The fact remains, it does take time to get there. What if you could use a simple trick to gain invaluable experience? Jeez. Would you like to be able to learn to see the markets as an expert over the course of only a few hours? This is what this trick will give you. It is another means of gaining expertise. This is a true favorite of mine, a way for you to see the markets or for what they are. An EBB inflow of buyers and sellers. Set aside several hours for this exercise. It is great to do this over 4 hours, but if you can do it with less time if you wish. The length of this exercise is determined by a time frame of the charts. So if you are looking at 30-minute charts, this will take 30 minutes. If you are looking at the 4-hour chart, this will take 4 hours. The 4-hour chart are mainly my favorite charts, so I love to do this exercise over 4 hours. Open a chart. Open the chart and wait for a new candlestick to appear. If you are watching a shorter time frame chart, such as the 30-minute chart, after a few minutes, about 3 minutes or so, take a screenshot of the candlestick. The idea, I had to reread that, but the idea is that you are taking snapshots of the candlestick as it is coming to life. While you are doing this, you should consider what you think is going to happen. It does not matter if you are correct or not. It only matters that you make a guess. You should take at least 6 snapshots of your candlestick at equal time intervals. If you're watching a 30-minute candlestick, you should take 6 snapshots at 5-minute intervals. If, however, you are watching the 4-hour candlesticks, you should take a snapshot at 40-minute intervals, and so forth. After each snapshot, answer the following question. Oh my God. Is the candlestick not trading higher or lower than the opening price? Do you think the candlestick will start trading higher or lower between now and the next snapshot? Will this candlestick close as an up bullish or as a down bearish candlestick? Do this for all of the snapshots. Watching the candlestick print like this is a lot like watching your child grow up. Make me feel like a proud father. Maybe in some ways you may be able to anticipate the future, but there will be turning points that are critical, and by recording the candlestick at regular intervals, you will be able to see how well you can anticipate the market. The point of this exercise is not to show you how unpredictable the markets are, or to encourage you to get in touch with your inner psychic. The point of this exercise is that by watching the market, you earn valuable experience. Just as working in Forex test, just as working in a Forex tester, you will help to get trades on your belt. It is also true that watching a candlestick unfold in a live market is invaluable experience. So I definitely need to understand the difference between just tapping an area and pushing through an area. Because the other day we tapped an area and then I got into a trade and the trade ended up losing. But I closed before I even got to my stop loss because I noticed, hey, this trade isn't going my way. All right, new 15-minute candle in less than 4 minutes. At the end of the exercise, you will have a slow motion record of the lifespan of a candlestick. Once the candlestick has finished printing, answer these questions. How does the second screenshot of the candlestick differ from the last screenshot of the candlestick? Did the candlestick start to moving up or down? Did the candlestick close in that same direction? Or did it end up closing in the opposite direction? During which trading session, Asia, European, or North America, did you choose to do this exercise? Do you think the result may have been different if you had chosen a different trading session? Did the candlestick after the one you observed close in the same direction as the candlestick you observed? Based on the first two screenshots of the candlestick, would you have been able to predict what the candlestick ended up looking like? If you are interested in really accelerating your trading, do this exercise often. It is quite different to backtesting in that you are watching the market unfold in real time, just as you would during a live trading session. The most important thing you can learn from doing this exercise is the importance of closing price. The closing price is actually critical to the expert naked trader. Think about this. If the closing price is not in the right spot, do you get a kangaroo tail? If the closing price is not in the precise spot for a bullish big shadow, do you have a valid buy signal? If the closing price for a bearish big belt is not near the low, but rather near the middle of the candle, is it a valid sell signal? The closing price is absolutely critical to the naked trader. The real secret to this simple trick is that the opening price of the candlestick does not matter as much as the closing price. Where the candlestick prints during the first 2 or 3 snapshots is not as important as where the candlestick ends up, where the closing price is. A slight difference in the closing price can drastically change the look of price pattern, and is, therefore, why this exercise is so critical. While you can watch a candlestick and see that the beginning of the candlestick is not nearly as important as the closing price, think about how much you learned since you began reading this book. Now you should be able to look at the chart and immediately know whether you can take a buy trade, a sell trade, or no trade. Now you know how to become an expert trader. Not only that, but you know what to focus on to become an expert trader. Now you know how important the closing price is to your naked trading setups. You should be feeling more confident now. You know precisely the steps you need to take to begin following the path to expert trading. In the next chapter, we will explore confidence in yourself, confidence in your system, what to do when you experience confidence problems, and why losing trades should have nothing to do with your confidence. Well, if you only risk it 1%, it shouldn't have anything to do with your confidence. Just think. Now I can see if you lost like 15% in one trade. Yeah, I'd be mad. Yeah, I'd be real mad. All right, gaining confidence. Inaction breeds doubt and fear. Action breeds confidence and courage. If you want to conquer fear, do not sit home and think about it. Go out and get busy. Excuse me. Yeah, I need to do that, don't I? Imagine you have the following: a trading system you are comfortable trading, a trading system with a very high win rate, an incredible amount of money to trade your system, all the time you need to trade. Well, I ain't even gonna cap to you. I'm not gonna be trading all day. I'd rather take the money I'm making for trading and invest it in something else. I definitely would love doing that. The best computer and the fastest connection. Now, we do need one of those right there. We need that. Is this all that you need to trade successfully? No, you need your confidence. Will you find consistent profits with only these things? The answer is no. You need much more than this to trade successfully. To find consistent profits, you need to have confidence. In fact, confidence is the most important ingredient for those trading success. For trading success, confidence will help you profit with an average trading system, but without confidence, you will be unable to find success. Even with a brilliant trading system, you will find that there are two different
Disparity.
Well, disparity is the word, and I hope you guys were reading because I'm not going back. No, I'm joking. The origin of confidence issues. All traders will have losing streaks. Losing streaks may lead to feeling of inadequacy and disparity. And disparity means a difference in level of treatment, especially one that is seen as unfair. Okay. However, if the trading system is a valid winning trading system, it has been tested and is profitable over the long run, there is probably nothing wrong with the system. Most of the time, a losing streak is due to the wrong application of the trading system. In other words, most losing streaks are due to misapplication of the system, caused by the trader and not the system itself. So in the meantime, I'm actually going to look at gold real quick. Okay. It's pushed past that zone. Well, the previous candle, but like I said, not enough volume in the market for me. We're going to see if we get a bearish candle and see what we do then. News in a little over an hour and 9 minutes to be exact. Okay. Most of the time, a losing streak is due to the wrong application of the trading system. In other words, most losing streaks are due to misapplication of the system, caused by the trader and not the system itself. There are several common issues that many traders have, all of which are led to losing streaks and confidence issues. Risk management issues. The next chapter will examine risk in detail. For now, it is important only to note that without proper application of risk management rules, a trading drawdown may be... Okay, there we go, another one. I'm not even going to butcher the word. I've never seen it before. So I'm just going to go ahead and...
Exacerbate.
Exacerbate. Make a problem, bad situation, or negative thing feel worse. What does that sound like? Okay. Let's read that again. The next chapter will examine risk in detail. For now, it is important only to know that without a proper application of risk management rules, a trading drawdown may be exacerbated and therefore may be very difficult to handle for many traders. Traders who have issues with risk management will usually multiply their drawdown and find it difficult to make money consistently. Normal everyday losing streaks are unfortunate and difficult for many traders to endure. But when these drawdowns are accentuated by poor risk management, the results are often disastrous. Okay. Problems with discipline. Discipline problems are common. Many traders at banks are not brilliant traders. In fact, many retail Forex traders are much better traders than bank traders. Bank traders do not have a sixth sense for the markets. These traders do not access to secret algorithms or indicators. Many traders are consistently profitable because there is a built-in discipline system at the bank. Bank traders have a risk manager. The risk manager ensures that the bank trader trades with discipline. The bank hires intelligent trainees to become disciplined traders on the Forex desk. The risk manager ensures that the bank traders do not risk too much on their trades. All the bank traders must follow one simple rule. They must not take more risk than they are allowed. Each bank trader knows how much he may risk. Every bank trader has a number, and his risk cannot exceed this number. The risk manager on the Forex desk oversees the risk associated with each of the trades taken by the traders. If a trader takes on too much risk, the trader is warned once. If a trader makes this mistake again, the trader loses his job. They don't even get 2 strikes. That's crazy. Real crazy. These are the rules. Each bank trader understands this, and the Forex trading desk is set up to tightly manage risk. The interesting thing about the system is that even those traders who are exceptionally profitable, the traders who make millions for the banks, even these traders are shown the door if they take on too much risk. Banks understand trading is a game of risk. All the bank traders must be disciplined traders. Any traders who steps out of line in a severe concern to the banks is a severe concern to the banks. Retail Forex traders such as you and I do not have a risk manager. However, it is possible. I got a risk manager. My risk manager has been bugged out for a couple days, but I got a risk manager. Okay. Retail Forex traders such as you and I do not have a risk manager. However, it is possible to recreate the bank system. This is how you can do this. Become accountable to someone. Find a trading buddy, your partner, a relative, anyone you respect. Offer them your trading statement each week. This is your report card. Report the risk for each trade. Be accountable to this person. If you take on too much risk, win or lose, your risk manager should reprimand, yeah, a rebuke, especially an office official one.
Reprimand.
Yeah, reprimand. Okay. All right. Should reprimand you. Perhaps your risk manager will change your trading platform password, so you are unable to trade for 1 week. I ain't gonna lie to you, that's going overboard right there. Cause like, if you taking my password or whatever, there is a possibility that you can basically just take my money. Facts, you could just take my money. All right. will change your trading platform password so you are unable to trade for 1 week. If you take on too much risk, you must learn to keep risking manageable if you want to consistently extract profits from Forex trading. Changing systems. If you have a losing streak, you may become too careful or too reckless with your trading system. This is a common reaction to a drawdown. This often leads to a drawdown spiral. This is important to keep track of what you are doing. There are many ways to do this, but the most common way is to keep track of your trading. Have you a trading journal? Yeah. To make sure that you are not changing your trading rules, do one step of the following. Take screenshots of your trades before you take the trade. The setup. Okay, so I definitely didn't know that. During the trade and after the trade is closed. Yeah, I just do after the trade is closed because obviously if I will understand what's going on in my mind if I just go back and look at it. Pretend like the candle's not there. You may also want to create a trading journal. This journal should include information such as why you decide to take the trade, the system you employed for the traders, your feelings about the trade, the result of the trade, and the rating on how well you applied the rules of your trading system to that particular trade. Alternate I've always had trouble with this word. Alternatively, you may set up a video journal. There are many software options for this. Give me 1 second. All right. Alternatively, you may set up a video journal, and this is what I'm doing. This is my video journal, live streaming. There are many software options for this. Some of them freely available on the internet. Very free, so free that it makes you money. That's how free it is. But a popular one is called JACCEN, also OBS or Streamlabs. You know, that's free. That's free. That's the free. What's up, Ben? How you doing, man? Which will allow you to take a quick record. I'm just reading Naked Forex right now, just letting you know. Okay, which will allow you to take a quick recording of your trade. A final option would be to look over your trading printouts, in other words, your trading record. This is another place where you may notice what is happening, why you are changing your trading, and what exactly you are doing that is different to your trading system. Right now, it's 6:35 in the morning right now. Well, 6:33 in the morning right now where I'm at. I'm getting up early and trying to get me some pips. Yeah, I was just I've been reading this probably about 45 minutes right now, and I was gonna actually stop at 6:30, but I kept going until I'm gonna stop probably about 7. Right now we're talking about I don't trade the news. You know, I just watch the news. It's not in my trading plan to trade the news just yet. When I feel more comfortable with trading the news and understanding the news and back testing the news, I do back testing sessions on Saturday. If you want to join in, I'm just gonna back test, and if I feel comfortable with taking the news trade, I'll take it. But as for right now, it's definitely not in my trading plan to trade the news. I literally have a trading plan, so yeah. I definitely do be nosy though. All right, where we at? Final option. Okay, a final option will be to look over your trading printouts. In other words, your trading record. This is another place where you may notice what is happening, why you are changing your trading, and what exactly you are doing that is different to your system. The key to combating this problem is to become aware, more self-aware of what you are doing as a trader. Just as a professional gardener does not mow the lawn the same way every single week, you may not be taking your trades the same way, even though you are trading the same system. Taking record of what you are doing is invaluable for self-assessments later, in order to look at exactly how you are executing your trades and what changes you may be making. Missing out. Traders may end up with a losing streak simply because they miss out on some trades. This is a particularly difficult problem for those traders who have low win rates. It is obviously possible to be a successful and profitable trader. In fact, to be a professional trader with a trading system that has a very low win rate. The problem is that if winning trades do not occur that often, it is imperative that all trades are taken to make sure the winners are captured. If you trade a system that has a low win rate and you miss out on some of the trades and these trades end up being large winners, it can be disheartening. Obviously, if you trade a system with a very low win rate, you need large winning trades to maintain profits. Missing out on these winners can be psychologically demoralizing. It can be difficult to maintain your confidence in a trading system with a low win rate. There is an easy solution, however. If you want to make sure that you do not miss out on trades or miss out on trading information so that you can manage trades, technology may be your answer. Today, there are many technical solutions for the naked trader. Technology today allows traders to be almost anywhere and still manage the trades. The key is to be prepared. It is possible for the naked trader to simply trade from a phone. With well-equipped phones, naked traders are able to not only place trades and manage trades, keeping tabs on live market charts. They can also set alerts. If the market goes to a predetermined price level, traders will receive emails or alerts on their phones. On the internet, there are services that allow you to set price alerts, so that once the market crosses a price level, you receive an email. There is also pros and cons of this. If you specifically give yourself a set trading time and you get an email or an alert, you know what I'm saying, it's a, you know what I'm saying, a loss. Like, you don't need to be trading it, but if you do it, you guarantee of breaking your trading plan, and yeah, that definitely can cause an effect. Can make things worse. You never know. If you receive an email on your phone, you should know nearly immediately if the market reaches a predetermined price. For more information about setting alerts about your charts on your phone, see the video on creating automatic alerts at that website. Confidence in you. Your confidence may ebb and flow. This part of trading. There are some easy tricks you can do to keep a steady stream of confidence in your life. You can do 3 things. If you practice these consistently, they will help you maintain your confidence. Step 1. The reason for your success. In order to be confident as a trader, you must consistently execute your trading system as it was outlined in your system rules. More importantly, you must know without a doubt the reason why you have chosen to execute your trading system. In other words, your beliefs must align with your trading goals. This is a foreign concept to most traders. Many traders assume that they want to make money, and if they are not making money, the reason is that they have not found the trading system that allowed them to make money consistently. Notice how the emphasis for most traders is on the system. The system yields the reward. The system is responsible for profits. Unfortunately, this emphasis on the system is incorrect. The only traders who do not have a concern themselves with psychologically of trading are those traders who use automatic trading systems. You are influencing your trading results regardless of whether you acknowledge this fact. Unless you are trading a purely mechanical system, a pure automated trading system, you are influencing each and every one of your trades. Here is a test to see if your system is purely automated system. If you can be away from the internet for a month and your system will still trade and make money for you, then it is purely automated system. Your thoughts, your beliefs, and whether you believe in your deserving of profits all influence how you trade your trading system. Think about and write down your answers to the following. How many wealthy people do you spend time with? Do you think that you will one day have a lot of money? I know this. I don't even think this. I know this for sure. When something goes wrong with money, do you think this is just your luck? I don't believe in luck, to be honest with you. Everything happens for a reason. When you see a wealthy person, what do you think? Hi, sir or ma'am. How are you doing today? What's your name? Do you think that wealthy people are good people? Obviously, they wouldn't become wealthy if they wasn't good. They got to be good at something. If you become extremely wealthy, are you worried that your personality may change? No, but your view on life may change. When you become wealthy and then you start looking at different people and trying to understand why they didn't have the same drive as you, that may change. Your understanding may change. All right. To learn more about your answers, visit their website. There you go. Aligning your trading goals with your financial personality is important and something that will occur regardless of whether you are conspicuously aware of this. Step 2. The reward of routine. The trading system you employ depends on you. You must identify and execute trades. You must apply the risk management rules to each of your trades. You must remain vigilant and ensure that you take all the trades that your system identifies as high probability trades. In order to achieve all this, you must have the important variables for your trading system. The rules for your trading system must include your trading routine. Define what you will do and what you will not do regularly. This will be your trading routine. Adhere to your trading routine is the closest thing you have to ensure against sloppy trading. Sloppy trading involves missing trades, trading the wrong lot size, placing the stop loss at the wrong price, or poor execution when entering the trade. At a minimum, this is what you should have written down for your trading routine rules. When will you look for trades? New York and Asian session. How will you calculate your trade size? By 1 to 2% of my total profit, or my total, how much money I got. How often will you check the charts during my trading times? How will you be alerted to trading opportunities when I'm trading during my trading time? How will you be alerted when you need to manage your trades? As long as I'm not losing money, I'm straight. Like any real money, I'm straight. Defining your trading routine is important because over time, as you begin to consistently capture profits, you will gain confidence in what you do. The simple act of entering your trade into a risk calculation spreadsheet will often bring an anticipation of profits to come. There is great power in routine. Step 3. The machine. If you have aligned your personal beliefs with your trading goals, and if you have designed a well-planned trading routine that you can adhere to, you are now ready to put in place fail-safe rules and tools so you may quickly regain your confidence when it wavers. The fastest way to regain your confidence is to backtest in a Forex tester. A losing streak can be put into proper perspective after you have traded the GU over 3 years and found consistent profits in a Forex tester using the very system that has you in a drawdown. Backtesting in general is one size fits all remedy. Not only does backtesting help your confidence during losing streaks, but it also helps you to concentrate on what is important in your trading system. The simple act of taking 50 trades in a Forex tester or chosen backtesting software adds another 50 trades under your belt. You will have honed your skills to identify valid trade setups and execute valid trades with the confines of your system. Okay, I've never seen this word before, hone, so I'm definitely gonna search it up. Of a blade sharpened, having been refined or perfected over a period of time. So humble. It's like honed is like being humble. No. Perfected. The simple act of taking 50 trades in the Forex tester will have honed your skills to identify valid trade setups and execute valid trades within the confines of your system. Spreadsheets can also help you. If you can make some spreadsheets with the data from your backtesting session, the data will help put drawdowns into perspective. There's a great template for you at FXJACCEN, that website. Download the spreadsheet there and enter your backtesting data into the spreadsheet. The spreadsheet will calculate for you the statistics of your trading system. Having the statistics in front of you is evidence that your trading system works, and you may need to trot these data out when you are experiencing a losing streak. You should trot it down all the time to remind yourself that what you are doing is successful trading. In the next chapter, you will see how confidence and risk are related. For now, it is important to note that if you are not following your trading system, that is, if your risk management does not fit with the rules of your trading system, you may find it extremely difficult to execute your system properly. Reasons for losing streaks. There are many reasons that trades may not make money. These reasons include the following: poor system execution, mistakes, sloppy trade entry, human error, etc. Changing markets, trading system no longer works. Bad technology, slow computer, poor internet connection, etc. Dishonest broker, market manipulation, bad data feed, frozen trade platforms, etc. Trading systems not flexible enough, unusual market activity, news report, etc. All these reasons have one thing in common: they are incorrect. These are not reasons for a losing trade. They are excuses. Confidence naked traders understand that these excuses will not aid the collection of profits from the market. These reasons for failed trading are executed, each offer a reason for failure. If you find yourself using these reasons for losing trades, please reconsider your thinking. Alright, I'm just gonna take a look at gold real quick. Okay, let's look at gold. Let's see how gold is doing. Alright, so we got that. I'm gonna look at this hour real quick, and we're gonna adjust our no trading zone. Oh, it looks like we're going up. All right. This is the zone that I actually want to grasp right here, like that I want to get with a partial right here at this zone to guarantee that I get profits. Okay. I also have something called an imbalance right here. I did not see it first, but now I see it because I just looked for it. What I am not liking is this late block right here. So I'm definitely determining that this will go up just because of all this ruckus. So it may just go up because of the news. All right. As a matter of fact, what I think I'm going to do is I'm going to stop here and 275 reason for losing streak. Yep, that's what we gonna do, and I will be right back. Actually, gonna leave you on gold. Oh, oh, oh. All right, we good. All right, so we closed outside of our zone, but I definitely want to. I definitely want to see if we are going to close above this zone right here. It looks like we're getting up there. News coming up in less than 30 minutes. Yeah. Old news coming up in less than 30 minutes. We're closing up. It looks like we about to get right. Closing above this zone. All right, let's look at DJ real quick. DJ hasn't done anything yet. Going up on the 4 hour right now. Like I said, it's an engulfing 4 hour candle. I should have actually took this buy, but news is coming up. News is definitely coming up. got news in less than 15 minutes, about 12 minutes to be exact. We're gonna be patient, very patient. See what this news do. Three, two, one. All right. And now this is the time where it goes down. Does it break that high? Well, the imbalance. Does it break the imbalance? And GJ went down. And it looks like we coming back down on gold. Yup, hit that imbalance, and a lot of people got in for sales. I see. And that's exactly why you have imbalances. Yeah, that 40 pips was straight. But if I'd have took a sell right here, Who knows if I'd be up right now? How much I'd be up right now? Actually, we can find out how many pips we can be up. Okay, we'd be risking 30 pips. 30 pips will be just about right there. And 25. It actually got down here, so that's 44. All right, we about to call it because getting close to the time that I need to do something. Peace out. Appreciate you for stopping by if you did.